morning to all traders and welcome to this week's Market Insights video. Today we're going to talk about gold and oil because it's the day that we analyze commodities and also energies, okay? So I expected the EIA report today, FOMC meeting and the press conference, okay? Very, very critical events for the week and also to close the year, of course, because it's the last FOMC of the year. Tomorrow we'll have the ECB and also the SMB. Very indeed strong week for the markets. The Fed is not likely to cut, of course. It's like the chances are nearly 0%. And the truth is that since the latest interest rate cuts, we've seen an improvement in the US economy, which means now, since inflation is rising, the Fed will probably stay pat and actually don't give a dovish view on the later conference. So Mr. Powell is most likely going to be neutral, if not hawkish. So any of the two is going to be considered as positive, right? Gold, we're still expecting this correction to end, right? The minor correction. With wave Y still not completed. Okay, so we've got waves A, B, and we're expecting for wave C to end. Now, within this degree, we've had waves 1, 2, 3, and 4 is still in play. Or it could have ended. Now, the scenarios here, there's two scenarios more likely and one that is less likely. We ended 4 here, and we are 1, 2, 3, 4, and 5. So we're moving lower. But the thing is, because this wave 2 is actually, its duration is quite long, as well as 4, it's not supposed to be an impulsive move. Because in the impulsive move, we can expect the correction to be sharp and the other correction to be lasting longer, right? So with that being said, I believe that this is an ABC, right? And this, since it's quite corrective, is going to be another A, B, and C. That gives me the idea that this is going to be a triple combo. We've got W, X, Y, another X, and another Y, okay? But that comes, note that that comes against my view that gold is going to go lower, especially today. So I'm leaning towards the first idea from that perspective and also the second idea from a technical perspective. So you can see that my view is a little bit mixed as to how this is going to move to the downside. But my view that this is indeed, it's got another move to the downside is supported, okay? I still think that we are going to get the 1420, okay? Now, that being said, I do see two biased signals here to the upside again. So there is a lot of contradicting signals, right? But I'll be honest, I don't think any of this is going to matter after today's FOMC, okay? So the technicals are good, but when news are coming in, do not really look at the technicals as much as you would look at the actual momentum. Where it actually comes from, where it's generated to. That being said, it doesn't mean support and resistance don't work. They do work very well. But, you know, if you see some signals over the RSI or MACD, they are very, very easily changing, especially when we're talking about the 1 hour time frame, okay? So my view here is mixed, but to the downside. Now, on the US oil, as you all know, we had this move to the upside the other day as we had the OPEC Plus meeting saying that there will be another production cut, they will be increasing. So I was looking at this last week with a WXY view, right? And I was seeing this as a 5, either with a triangle down here. I was expecting this to be a triangle, have a false breakdown and then move up. Okay, that was the first scenario. It didn't happen. And I also expected that to either be that case or a 1, 2, 3, 4, and truncated 5. And this is what's happened, okay? So with that coming through, we've had then waves 1, 2, 3, I believe 4, okay, and then 5 with either an ending diagonal or any other impulsive 5-wave move, okay? Now, since we are in a correction, we've had here ABC that corrected for wave W, another ABC for X, and we're going down again, most likely with an impulsive move to complete wave Y, right? Wave Y can end anywhere between 58 and 56.89 with the chances of prices not moving below the 57.25 increased, because this is the top of wave 1. So that means that it would most likely invalidate our scenario for this move to be impulsive. However, there is case, of course, when we have very small penetrations of previous levels without that affecting the higher degree pattern. Okay, so the thing is that this signal is supported by the RSI and the MACD, so I really have, there are very, very better chances actually than gold, okay, to move lower for a correction and then move to the upside. Or of course, you know, if we break below that level, then we should still be looking maybe even for wave 4 to move down here, because wave 4 can go down to 54, around 54, 55 levels. And then of course, we should be able to receive further clues. But until then, we pay attention to FOMC today, very critical day. Tomorrow, a reminder again, ECB, SMB, the Swiss bank, yeah, plus UK elections. So take a big breath and be careful at how you trade in volatile times.